In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product. I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. I think Ethereum can reach 60,000 per token in that world, and that would proportionally benefit the DATs because Ethereum's around 4,500 today, so a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars of market cap.
Ethereum stands at a breathtaking crossroads, suspended in a tense equilibrium between past glory and future domination. After a strong market rebound, the world's second-largest crypto remains locked in a range, oscillating between institutional demand at $3,400 to $3,500 and supply at $4,600 to $4,700. Traders are watching with bated breath as Ethereum retests its lost trendline support, now a formidable resistance, signaling that the next move will not be gradual but seismic. This is no ordinary consolidation. Beneath the calm surface lies a brewing storm of liquidity and conviction, a tug-of-war between innovation and inertia. As Cathie Wood reminds us, history may be repeating itself. In 1971, when the US abandoned the gold standard, chaos gave birth to creativity. Wall Street responded by engineering financial instruments that redefined global wealth. The result? The stock market eclipsed gold, and the dollar became the world's unshakable anchor. Now, that same metamorphosis may be unfolding again, only this time on the blockchain. Tom Lee argues that Ethereum is poised to become the bedrock of a new financial era, where trillions in traditional assets from real estate to equities migrate onto decentralized rails. In this vision, Ethereum doesn't just rival Bitcoin, it replaces it as the true digital foundation of global finance. But every revolution has a cost. As legacy finance fuses with decentralized power, we must ask, is Ethereum building the future of freedom or the architecture of a new kind of control? Let's take you back to this explosive discussion between Cathie Wood and Tom Lee for more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for tuning in. Enjoy the rest of the video.
So, overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. What he's done successfully, of course, is really to upscale it so rapidly, because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share, per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year, because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stablecoins, and stablecoins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product, and it has created two enormous companies, one being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee.
Now, Bitcoin is at about, 2.4 trillion now, somewhere around there. And Ethereum is 540 billion. You think there is a flippening, as they might say. I'd love to hear you talk about it, but just to set this up, anyone who's listening to this podcast knows that we have in 2030 a forecast of the entire crypto asset ecosystem. And of course, we're going to be modifying this with time. We're doing our big ideas work now, but as of our last go at this, the ecosystem we expect to hit $25 trillion in 2030. The vast majority of that in Bitcoin, mostly because we look at Bitcoin as a global monetary system, rules based that we've been missing since the U.S. went off the gold exchange standard in 1971. That's a very big idea. It's a technology, obviously, and it is the first of its kind. And we wrote a paper in 2016 on this, first of its kind in a new asset class. So those are three very big ideas. I'd love to hear your thoughts on why ETH or the ecosystem will surpass Bitcoin.
Okay. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets.
One of the thoughts here is, Ethereum went from proof of work to proof of stake. Now, in the next 5 years, we just think about all of the creativity that is going to evolve in the financial markets around Ethereum. We totally agree with you on that. But there will come a time where we're in some kind of crisis, and then we see the benefits of proof of work relative to proof of stake, because you're bringing in, as you say, you are bringing in a lot of TradFi and a TradFi thinking into the Ethereum world. So just wondering, if a crisis will be a moment of self-reflection and all right, is there a real difference between this proof of work world and this proof of stake world?
Yes, there is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, has become is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration.
Tom Lee's confidence in Ethereum is built on one major shift: the movement of real-world assets onto the blockchain. He sees a world where not just currencies, but real estate, stocks, and even loyalty rewards become tokenized. These tokens, sitting on transparent and programmable systems like Ethereum, could unlock markets worth tens of trillions of dollars, far beyond what most forecasts dare to imagine. Revisiting the flippening, the long-debated idea that Ethereum's market cap could someday overtake Bitcoin's, the analyst remains bullish on Bitcoin's role as digital gold, but envisions Ethereum as the platform where the real economy thrives, just as equities once outgrew gold's value decades ago. Lee calls this year the beginning of that transformation, when Wall Street starts constructing its digital foundation atop Ethereum. Even stablecoins are described as the ChatGPT moment for crypto, evidence that blockchain's biggest revolutions emerge from real-world utility, not hype. Yet Lee stays cautious about potential pitfalls. A sharp decline in staking could challenge Ethereum's proof-of-stake security. Still, the network's flawless uptime and accelerating institutional adoption stand as powerful proof that it's ready to shoulder the weight of global finance. Let's watch more clips from the interview.
I think that there is a lot of there to Ethereum being the base where Wall Street is going to build a lot of the future. As you know, corporate chains are always going to be viewed as someone's fat finger on the scale. And that's just how Wall Street operates anyways. You know, if some bank created a layer 1 blockchain and they're the oracle, we know that they're tilting that in their favor. And of course, the second is that all blockchains are basically databases, and the security model becomes a question because it's either a centralized chain, which isn't really a blockchain, or it's got a security model that can be exploited. And we know there's so many high-profile hacks that have taken place. And uptime is a third dimension because, as you know, that is one of the prominent features of Ethereum, that its entire history, resilience was an existing feature and has never had any downtime. And I think that that's important when we're thinking about a world of high-speed transactions in a 24/7 world. I think a lot of creativity needs to take place on layer 1s. And, you know, I mean, to me, as we think about tokenized world and using prediction markets, a lot of that thinking is taking place around building on layer 1s and layer 2s on Ethereum. But a broader statement I'd make is I don't think one blockchain can hold the entire financial system anyways, because let's say your 27 trillion is correct, and I believe it is even conservative, because today global GDP is 80 trillion. And we know GDP is an imperfect measurement because it only measures final sales. So let's say it measures 120 trillion of gross activity is what 80 trillion is measuring. Financial system ledger is 120 trillion on the other side of that. If just half moves onto the blockchain of the financial transaction, that's a 60 trillion market. Plus, we know that as you tokenize loyalty and IP, things that are GDP measurements but not financial markets, that's also on the blockchain. So maybe the total, what's ends up on the blockchain is 60 plus 20, 80 trillion market versus your 27 trillion. That cannot fit on one ledger. Stats fundamentally trade off the value underlying. And so moving it to 24/7 is just a convenience transaction. It's not transformational because it doesn't unlock anything new. But tokenizing an NVIDIA or a Tesla is very appealing. Cathie and I have talked about this in the past, that the real value and the unlock of a tokenized NVIDIA is that we can do a factor bet. We can then see what's priced in for their Blackwell chip sales or their China sales, because now you take NVIDIA's price and you've broken it into tokenized components. And then you can use a prediction market to hedge yourself. So, Fed's replaced, or the Fed does a surprise hike. I can hedge a tokenized equity that way. The issuer has huge transparency. NVIDIA now knows what's priced in for its Blackwell chip sales, its China sales, and they can therefore work with a lot less, hey, what's priced in our stock? They know exactly what's priced in. So I think tokenized equities is a huge unlock, and it's useful for investors and for issuers. And of course, moves us away from quarterly earnings too.
Yeah, it does. And do you think the administration, that part of the talk about changing quarterly earnings and so forth, might incorporate this sort of thinking?
I would say I wouldn't be surprised because, as you know, the administration has a lot of folks tied into Silicon Valley. And we know that the prediction markets were so useful in that election. They proved themselves.
Oh, yeah.
Polymarket got 50 out of 50 states right. So I would agree, because that's probably a better way to model earnings than to wait every 90 days for a company and have the CFO tied up for a month sitting in a room, auditing financials.
This is music to our ears. We're all about transparency, right?
Yeah, that's right. I think this would be a really important step in making markets a lot clearer for investors and understanding what they own. It makes it less black box. And so that's why I think tokenization is a huge deal.
This is our big battle. It would help our strategy enormously, because it would take the FUD, fear, uncertainty, and doubt. Really, a lot of that is caused by analysts, listening to the companies, they followed for years and years and years, who are saying, oh, off with their heads. That's our installed base. No way. And it would, getting the betting markets involved and getting more people thinking about it, just thinking about it. That's all we need, would be a boon for efficiency of the market. The markets are highly inefficient right now, highly inefficient.
Yeah.
Yeah.
It's basically, I 100% agree, because today the equilibrium of stock price is like, we have to take everything that you guys just said and put it into a single unit of a price. But in a tokenized world, there's equilibrium for different components, and 100%. I mean, like a Tesla, an N equal 1 company, it's very difficult for the markets to price equilibrium because Elon Musk is changing dynamically the future, but we're now having to price it in and based on deliveries of units sold last quarter.
And I think, it was a real question when Ether was falling relative to Bitcoin dramatically, and no one wanted to bet on it, even though these institutions were basically signing on to Ethereum. To me, it was such a big disconnect. But so now we have the term, but what about that issue?
We have to think of Ethereum as the monetary base and the standard. So let's say, I'm being really theoretical, in a quote world where the L2s pay 0 gas fees, to the L1, which is not true. Mm-hmm. The fact that Ethereum is the monetary base would actually accrue value to it. It's the same reason someone's saying, hey, look, we trade stocks all day and it's quoted in dollars, but we don't pay the US dollar system to exist. We'd be right. The fact that NVIDIA trades in the US helps the dollar. So that's why even if there was no exchange between the two, it accrues value. But of course, we know that they're trying to fix that. And so L2s want to support L1s. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well.
Yes. And I think the more layer 2s that evolve, the more important the underlying becomes, right?
Holding a Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world. And many would become multiple hundreds of billions of dollars of market cap.
Tom Lee's vision of Ethereum's future is bold, even shocking. He predicts that if tokenization truly becomes a global standard, Ethereum could someday trade around $60,000 per Ethereum, a 15-fold jump from today's prices. That number is not just a forecast, it's a statement about what Ethereum could mean to the future of finance. If it becomes the backbone of a tokenized world, every transaction, every asset, and every market could eventually run through its network. This is what he calls the foundation of a new, open, and efficient financial system. He also pointed to that potential, explaining that tokenization could free the markets from slow, outdated cycles. Instead of quarterly earnings and delayed reactions, data and value could move in real time, creating something close to continuous price discovery. That shift would mean power moving away from centralized gatekeepers toward global connected markets that react instantly. But Lee also warns that the brighter this dream shines, the more fragile it becomes. The arrival of Wall Street is a double-edged sword. The flow of institutional money strengthens credibility, but can also dilute the decentralization that defines Ethereum's spirit. If too much control concentrates in the hands of big players, the network risks becoming what it once fought against, another closed system disguised as innovation. He worries about proof of stake during crises too. If staking rewards drop or participants panic, the network's safety could wobble, and confidence could vanish in seconds. However, he still believes the ecosystem's resilience, its developer strength, and its institutional trust will help it withstand those storms. For everyday investors, this is not just another crypto story. It's the beginning of a much larger transformation. The world is moving from simple ownership to a new architecture of finance where assets can be divided, traded, and priced in real time. Tokenization could unlock massive value, but it also opens the door to new risks, new dependencies, and new rules. Lee's optimism carries weight, but it also comes with caution. Ethereum's road ahead will be filled with breakthroughs and tests. It could redefine global finance or stumble under its own ambition. What's certain is that this moment will decide whether Ethereum can truly carry the dreams of decentralization while holding the trust of Wall Street. This balance will define the future of money itself. Now, given all the monumental shifts, do you believe Ethereum's utility as the foundation for a new financial system is strong enough to not only challenge, but ultimately surpass Bitcoin's market dominance? And do you see Ethereum truly becoming the next big thing in Wall Street? Please leave your thoughts in the comments section. Thanks for watching, and don't forget to like and subscribe.